Good evening. I'm your host. This is Maloney Streetwear Market Insight Weekly News Brief. 4.6 trillion naira wiped out, then 2.6 trillion naira recovered. What just hit the NGX? Capital gains tax panic, policy U-turn, wild swings. Nigeria's most volatile week of 2025. Naira steady, stocks crazy. Here's what this week's roller coaster means for your portfolio. This was a whiplash week for Nigerian equities. After last week's slide, the sell-off climaxed on Tuesday, the 11th of November, when the NGX All-Share Index ASI crashed 5%, wiping about 4.6 trillion naira in value and closing around 141,327 points, the steepest single-day percentage fall on record. The hit was concentrated in heavyweights like MTN Nigeria, Dangote Cement, BUA Cement, and Zenith, many of which fell the full 10% daily limit as investors rushed to exit ahead of a new capital gains tax CGT regime and rising geopolitical noise. By Wednesday 12th, the tone flipped. The finance minister, Wael Edun, signaled that government would take a cautious and consultative approach to implementing the new CGT on securities and would listen to market complaints. That reassurance sparked a massive relief rally. Market cap jumped by about 2.6 trillion naira. The ASI rebounded roughly between 2.9 and 3.3% to the mid-145,000, and banking, insurance and oil and gas indices all posted strong gains. The bounce continued into Thursday 13th, when the ASI added another 1.08% to close at 146,981.2, lifted by international breweries, Nigerian breweries and Tier 1 banks, the Fugas names, as bargain hunters piled into oversold blue chips. Sentiment shifted from outright panic to cautious optimism, but the damage from Tuesday still leaves the market slightly down for the week so far. On the macro side, regulators quietly eased another pressure point. The downstream authority scrapped plans for a 15% import duty on petrol and diesel, removing a near-term inflation and fuel scarcity risk that had worried consumers and investors. ASI last Friday, the 7th of November close is circa 149,524.8 points. ASI as of Thursday, the 13th of November close, 146,981.2 points. That's a week-to-date decline of about 2,543 points, equals minus 1.7% from last Friday to Thursday. Despite the drop, the index is still up roughly low 40% year-to-date, underscoring how strong the earlier rally was before this correction. Tone this week: extreme volatility. Tuesday's crash was driven by fear and forced selling. Wednesday and Thursday were all about bargain hunting and policy relief. Turnover total value traded spiked dramatically on Tuesday. Notes volume jumped around 800% versus normal and stayed elevated through the rebound sessions, a sign that institutional money was actively reshuffling positions rather than sitting out. The official NGX weekly gainer/loser table for the week, ended the 14th of November, was not yet published at the time of this recap. The names below are those that featured most prominently in the big sell-off and subsequent rebound. Likely top gainers week standout winners: GTCO hit the 10% up limit on Wednesday as CGT reassurance triggered aggressive re-entry into Tier 1 banks. Zenith Banks, similarly locked limit up midweek, benefited from attractive valuations and strong earnings expectations. Access Holdings joined the banking surge as investors rotated back into high-quality financials. Nigerian breweries jumped around 10% on Wednesday as consumer names recovered from Tuesday's carnage. Oando featured among top gainers on Thursday, riding both the relief rally and firmer oil prices. Likely top losers pressure points after the shock: MMT in Nigeria, one of Tuesday's biggest casualties with a 10% plunge, remains under scrutiny given tax and regulatory overhang. Dangote Cement, also down the daily 10% limit on Tuesday, still digesting stretched valuations and CGT concerns. BUA Cement mirrored Dangote's drop, reflecting broad stress in industrials. Transcorp, heavily sold in the panic session, a classic victim of de-risking from high beta names. Austin Lars, NEM, ABBDS, mid-tier names that topped the losers table even on Wednesday's rebound day. largely on profit-taking. Banking. Clear leader this week. The banking index jumped over 7% on Wednesday alone as GTCO, Zenith Access and ETI all closed up 10% in response to CGT clarification and cheap valuations. Consumer goods. Mixed but improving. Nigerian breweries and other staples helped lift the consumer index over 2% midweek after being hit hard on Tuesday. Oil and gas. Positive bias, Oendo, and peers benefited from bargain hunting and slightly stronger Brent prices in the mid-$60. Industrial goods and telecoms, laggards. Big names like Dangote Cement, BUA Cement, and MTN bore the brunt of Tuesday's meltdown and haven't fully recouped their losses. Globally, risk sentiment turned shaky again. Hopes for a December Fed rate cut have faded into a coin toss as officials sound cautious and investors worry about missing or delayed US data after the government shutdown. US and European equities slipped late in the week while 10-year Treasury yields hovered a bit above 4.1%, signaling sticky uncertainty on global rates. China added to the nerves. October industrial output and retail sales both grew at their weakest pace in over a year, reminding markets that global demand is still fragile. For Nigeria, that argues for continued volatility in export earnings even as oil holds up. Brent crude, around $64 per barrel on Friday afternoon, up roughly 2% on the day as geopolitical risks in Russia's Black Sea infrastructure flared. This level is supportive for Nigeria's fiscal numbers but not a windfall. FX official NFEM/CBN closes Friday the 14th of November 2025. NGN/USD about 1,441 naira to $1. NGN/GBP around 1,884 naira to £1. NGN/UR at 1,664 naira to 1 stood at 1,030 naira to $1 Canadian. Parallel and BDC quotes cluster only slightly higher, roughly between 1,450 to 1,460 naira to $1, 1,900 to 1,930 naira to £1, 1,650 to 1,680 naira to €1, and 1,034 to 1,039 naira to $1 Canadian, meaning the gap between official and street rates is currently modest versus the wild swings of 2024. For diaspora investors sending money home, those levels mean dollar remittances still convert at mid 1,400, pounds and euros near 1,900 naira to £1 and 1,660 naira to €1, Canadian dollars just above 1,030 naira to $1 Canadian before bank and fintech spreads. This week is a reminder, markets can change direction faster than you can rewrite your watch list. The investors who came out ahead weren't the fastest traders. They were the ones with cash reserves, clear rules, and a long-term plan that let them buy quality names when panic was loudest. That's the market update from Moloni Streeter for week ending the 14th of November 2025. Do have a great weekend.